Shares of Foot Locker are up almost 2% right now. We bring into the stream Brian Sozzi, who has a special guest who can explain why the sneakers fit so well. Brian?
All right. Thanks so much, Adam. Yeah, joining us right now is Foot Locker CEO Dick Johnson. Dick, good to speak with you again. And part of the reason why the stock is up, I suspect, would be off of the quarter you just announced on Friday. It's not very often you see same-store sales up 80.3% in the most recent quarter. How would you grade the momentum in your business right now?
You know, Brian, we had a tremendous quarter. You know, it's hard to compare against 2020, given the COVID closures, and we were just starting to open doors back up. But when we go back to 19 and see that we were up against that as well, you know, I think our team had a great quarter. You know, the product was hot. There was certainly stimulus money in the marketplace. We saw the ports free up a little bit. And we saw our vendor partners able to ship product to us quicker, you know, more expedited methods. So everything that we saw was a positive, and clearly the customer has a lot of desire for the great product in our segment right now.
What do you think is the biggest driver of the business right now? Is it still consumers have those stimulus checks, or is it the likes of a Nike and a Puma just selling cool stuff?
I think it's a combination, Brian. It always is, right? I mean, the consumer loves great product, and there's a lot of great product in the market right now from brands that you mentioned, and Adidas and VF with Vans, you know, and we've got just some tremendous brand partners that continue to bring heat. So whenever our consumer has money in their pocket, they look to us. But even more importantly, right, the fresh kicks on their feet, the fresh T-shirt, the fresh fleece piece is very much a part of their uniform. So even as they start to go out and do more things with the economy opening back up, I truly believe that they'll be in our stores buying the great product that you referenced.
What's that post-pandemic footwear look?
Well, for our consumer, it's going to be sneakers, Brian, without a doubt. You know, it's I've been an advocate. I'm hoping that even in your suit today that you're wearing sneakers. But I've been an advocate that, you know, sneakers are everyday sort of footwear, and you know, our brands bring great looking stuff that's very athletic looking. They also bring some very casual looking things that fit in any scenario. So certainly for our core customer, it's going to be a pair of sneakers, a fresh T-shirt, and a fresh fleece piece to make their uniform complete as we get into the summer.
Dick, I'll take the veil off some of the TV magic here. I'm not wearing any sneakers right now, but if I was wearing, I'm sure I got them at Foot Locker. Some of the gains,
Good to hear.
Some of the gains that you saw in the first quarter, is that sustainable?
But 80.3%? No, right? I mean, it can't be, right? We're up against door closures from a year ago, but the truth is the strength that the team put together in the first quarter, certainly we believe that there's product heat and the customer has a huge desire. So I think there is positive momentum behind the business, and we're certainly optimistic, right? We see as doors begin to open, as economies begin to open, we have even more upside to continue to deliver great product to our consumers.
One theme we're thinking about here at Yahoo Finance, Dick, is the great reopen. You know, the fall is going to look very different for households. How do you think that will shape your business?
Well, we're going to have a real back-to-school season this year, right? You know, last year was sort of an abridged season with some kids going back to school, some kids in a hybrid learn-from-home sort of situation. We see the economy truly starting to open up. Will it be July 4th? Will it be closer to back to school in the fall? Not sure, but again, our consumer loves a fresh pair of kicks, right? They want the coolest product that they can possibly get. Our vendor partners continue to bring that to market, and we're going to serve our customers, whether that's digitally or in our stores. And one of the things with the great reopening that you referenced, Brian, is our consumer loves being in our stores, right? Even as we've started to see some of the capacity limits lift, we've seen more people out and about. We've seen, you know, the mask requirements change a little bit. We've seen a lot of people in our doors. You know, we've got stores still closed in Canada. We've got stores still closed in Europe, but across the U.S., we certainly are wide open at this point, and consumers are coming back into the stores in a big way.
We got news today, Dick, that New York City schools, they won't allow remote learning this fall. I mean, you take a step back, do you expect a sneaker buying boom for back to school?
Well, whether it happens specifically at back to school or we continue to see this momentum behind us, you know, again, as great product comes into the marketplace, our consumer finds a way to buy it. So, yeah, I think there really will be a back to school season this year, Brian, and that'll be different than last year. You know, when kids were making and families were making the decision about do they go back to school, is it a hybrid, whatever, they will want to look fresh and new when they get to see people again, right? They haven't seen a lot of their friends for a while in some cases. So their ability to have great products on their feet, fresh new fleece piece, new t-shirt, whatever it happens to be, those are great opportunities for them to look really great when they get back into the school environment.
Are you getting enough inventory to support what you're seeing in the business in the latter half of this year? And I ask that inventory coming out of in the first quarter, it was down 30% year over year.
Yeah, it was, and yet we were able to have a great quarter, right? So again, the inventory that comes in turns, and we've been, I talked a little bit about the slowdown at the ports. We've sort of been through that now, right? The ports are, still backed up. We know that there's still container vessels at anchor, but again, it depends on where our product is in the process. And we continue to see our receipt number and our sales number and our inventory number getting more in line. We ended our last fiscal year and the first quarter inventory down between, in the 30% range, as you mentioned. But we continue to see the order book look good and great quality products coming through day in and day out.
Why did you make the decision to shutter Foot Action?
Well, Brian, we constantly do a portfolio review, right? This is an ongoing process. If you go back in 2020, we actually shut down the Runner's Point banner in Germany after we had done a look at the productivity and the profitability by banner. We do this on an ongoing basis. We've talked for many quarters about the flexibility that we've built into our lease portfolio. And as we look forward and see where those expiration dates are on a lot of the Foot Action banner stores, now's the time to make the move. So again, we see, that we'll be able to drive where we transition stores to a Foot Locker and a Champs, we'll be able to drive productivity. We've got the flexibility in the leases, and we know that it's a strengthening of our portfolio in total going forward.
How many of those stores, the Foot Action stores, how many of those stores will become Foot Locker?
Well, we're going through the portfolio review in detail. We will see probably a third of those stores become either a Foot Locker or Champs or Kids Foot Locker, depending on where they're located, the right size, et cetera. We've got lease expirations on about 40% of them that we'll be able to affect, and we're reviewing that remaining 25-ish sort of percent to see what the best use of that property is.
All right, we'll leave it there. Foot Locker CEO Dick Johnson, always good to see you. Stay safe. Hopefully we'll get to do this in person this year.